How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was collected on July 7th, 2020. Here is a snapshot of the data as of that date. And so let's take a look at what we have with gold. Alright, so taking a look at gold here, what do we see? Over the last few weeks, we have a big increase in long positions, and this is what we've been expecting since they started taking profits here on longs. They eased their long positions only to start adding them back in again. And as you can see by the monthly chart, we have no obstacles keeping price from continuing higher. Although we are expecting a retracement at some point, likely that it's going to happen sooner rather than later. If we take a look at short positions, we see that they're starting to increase. Okay, supply is starting to come in as supply is being contacted here on the chart. So you also take a look at here, bullishness, bullishness, bullishness. Now take a look at the coloration of the cells. Okay, from green to blue. So we're going from bullish to neutral, and this is what typically happens right before a reversal. Okay, bullish to neutral, and then the next stage would be eventually bearish. So a retracement down here would be very healthy. Okay, down to here would be very healthy, and I don't think there's any reason why we should expect more downside after that retracement. Okay, looks like things can definitely continue higher. Now we take a look at oil. And we know that oil has contacted some supply, and so that the rally up here after it contacted supply, and what do we see with long positions? They're being reduced for the last 3 weeks. Okay, profit taking on longs. Now we've talked about this in the EURUSD report, where supply gets hit, they take profits on longs. We are expecting price to reverse and head down at some point, although I've detailed in the EURUSD report where we believe that reversal is going to take shape from. So we take a look here, and we can see that the sentiment continues to be bullish. Okay, continues to be bullish, and if you take a look at the positions, still bullish. Okay, nothing's changed in terms of that, but there is going to be some profit taking after this massive rally that we had. Okay, from 20s up into the 40s. We called this move all the way from down here all the way to up here. We called that move, and so after this massive rally there's going to be a drop. Again, we've pinpointed where we believe that drop's going to be, so have a look at the latest EURUSD report. The US dollar, we have longs cooled off, and that this came after contract expirations, and shorts are somewhat aggressive. Okay, so if you take a look at the coloration of the cells for the short and long percentage, you'll see that there is a slight bearish bias. Okay, if you look at net positions, you also see that there is a bearish bias. Now if you read through the latest EURUSD report, you'll see what we have to say about that in terms of potential bearishness on the dollar, bullishness on the euro, and the corroborating evidence to support all these pieces of evidence. Okay, so it looks like it's going to be dropping. There's a very strong argument for that, and we are seeing a lot of corroborating evidence to support that. So look through the EURUSD report and see what it is that we're looking at, and then you'll be able to see why that argument is very valid. And we have the Aussie US dollar. Longs are cooled off. They were very cooled off here. They became a little bit less so over the last couple weeks. Okay, but if you take a look at price right here, we got a little rally up, and we see shorts starting to pile up again. Now remember, recently shorts were very aggressive. Okay, back in March. That's because price dropped all the way down here. Then they reversed, price up. Longs were very cooled off. Contracts expired right here. Okay, and let's take a look at what they did at that point. They reduced shorts from 66,000 to 38,000. That's almost half, okay? Almost half. At the same time, they didn't do anything with their longs. But over the last few weeks, they have been indeed adding to their long positions, okay? So big reduction in shorts. They use contract expirations to get out of those shorts. I think when we look at the charts, there's a big argument to be had in terms of expected move to the upside. Okay, we are expecting price to continue to the upside. I think what we're seeing here with the positions and this big shift in closing of short positions, I think it leads to the idea of a bigger push up. So that's looking really good for a continued move. USCAD, this one's a good one. We have 43,000 increasing to 48 for long positions, 28 increasing to 31 for short positions. And that comes as price was dropping here. Okay, so we've reached demand and we are expecting upside on this pair. If you take a look at the sentiment, it is somewhat neutral. Used to be a little bit bullish right here. Okay, now it's turning neutral. Now we're seeing the same thing with the US dollar. Okay, US dollar bullish, neutral, straight into bearishness. So it's interesting. Okay, are we going to get more downside? That's the question here. You know, all the chart dynamics are suggesting that price is going to continue, but there is one large thing that sticks out that I detailed in the latest EURUSD report, which suggests potential downside is to come. So we're looking at these positions and we're trying to determine what it is that they're preparing for. Longs used to be aggressive, they became less aggressive. Shorts used to be cooled off, now they're becoming a little bit more in play. So is this a reversal? Is this a switch of positions? Are they planning or preparing to push price even lower? The possibility is there. We'll continue to monitor the positions and reflect on what it means in terms of the direction that price is going to take in the coming weeks. Okay, so let's take a look at the US Swiss. Longs are cooled off, shorts are a little bit more aggressive. We got a clear bias to the downside. It became less so over the last few weeks, but still a bias nonetheless. Euro US dollar, we take a look at this one, we see, let's point out some things here. Okay, alright, so first of all, longs are aggressive. Okay, there's no doubt about that. Longs are aggressive. Shorts are cooled off. Okay, the bias right now is bullish. Let's look at net positions over the last few weeks. 72, 75, 81, 95, 117. That's 1, 2, 3, 4, 5 straight weeks, okay, of adding to long positions, which causes the rally up in price. Okay, then some profit taking down to 98 and then adding back to 103. Now remember, this last position here, this last set of data up here, reflects this candle here, right there. Now, as you can see when you look at this price action here, price has already been consolidating for some time. All right, and typically we'd get 2, 3, max 4 candles before a bigger drop, typically. Okay, so after these candles are produced, 1, 2, 3, we get a fourth candle, and on that fourth candle they are adding to their longs, doing nothing with shorts, basically increasing their net positions from 98 to 103. So you have to ask yourself, why are they doing that? Okay, and I think it lends to what we're seeing on the other charts. All right, there's a potential for a continued move to the upside like that, so we'll be monitoring that. Pound US dollar, same thing with here, potential for upside. Increase in longs, slight increase in shorts. Bottom line is net positions are dropping and sentiment is neutral. Not much in terms of positions there to give us some guidance. We look at the US dollar, Japanese yen. Longs are very cooled off. Shorts are the more aggressive position. Clear bearish bias here. Net positions are in the negative. I mean, this is screaming that it wants to go down. The chart formation is not suggesting that. We've been, ranging, holding this descending trend line for quite some time, but I believe there's a good argument for a move downwards like that. And last is the Kiwi, and we see slight decrease in longs, slight increase in shorts, not much there. Bottom line is neutral. We've gone from bearish to neutral. Is bullish coming next? Possibility. Okay? Possibility. Thing is, we are inside supply, so if this supply gets taken out, that's it. It's clear sailing for a move higher. I think there's a good chance of that. We are getting that reaction from that supply right now, so it may take some time before it gets removed. Might even drop before removing it. So we'll be monitoring this because something is definitely building in terms of momentum here. Okay, so there you go. There's your CFTC report for July 7th, 2020. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks, and have yourself a good week. Take care.